Where should investors put their money right now?
Well, thank you for making that link, because a lot of people don't. What inflation does is it pushes up interest rates. Interest rates push up discount rates. And all of a sudden, the dollar that a growth company is going to earn 10 years from now is not worth so much. But our value stocks are making that dollar today. And so in the past couple of years, we had almost negative real interest rates. And so that dollar 10 years from now was almost worth more. Now, as we get more and more inflation, the companies making money today become relatively more valuable. The other thing that value stocks have is assets today. Those growth stocks are going to have to be building those plants and equipment over the next 5 years at higher and higher costs versus the value stocks that own the PP&E.
That's an interesting point, Emily. I think people go, well, it's fine. Tech companies, they have all the money in the world, so they pay a little bit more for the plant. You know, they're still, look at Amazon, look at Google this week. But of course, those are just a couple examples of tech companies with actual profits versus, and we'll talk about this later, EVs and some other parts of that space that barely have any profits. And that becomes a bigger problem. Do you generally advise people the same thing that Charlie's talking about, to kind of look for, look at away from tech, look at companies with pricing power? Where would you have people invest?
Yeah, we definitely agree. And we think the next leg of the market up will continue to be this reflation trade, particularly financials and energy, which will both do well in a higher yield environment as well as this increased growth environment that we're hitting. And they've been behind the S&P since the end of 2019 by 13% and 46% respectively. So we definitely think there's some value there. But the other thing that he mentioned was negative real yields. And we think that's really important when we're thinking about inflation, because with inflation increasing and interest rates still at lows, real yields on cash are even more negative. And, that's not good for our investors. There's a lot of excess cash on the sidelines. And we're advising our clients to put some of this excess cash to work because it's going to be a drag on their returns.
Shepard Smith here. Thanks for watching CNBC on YouTube.